Hey, it's Dan Morales, and this is Homebuyer Radio. This is episode number 100. Hard to believe that, we've gone 100 episodes deep into this podcast. When I started this nearly 2 years ago, I had no idea where we were going to go with the podcast. I had no idea how the audience would grow. I had no idea where I was going to come up with content on a regular basis, right? And really the content that I get for this podcast, it's really being birthed out of experiences that I have in my 27 years of lending and things that keep happening to clients of mine where they make these little missteps as part of the mortgage process. And then I end up having to kind of educate them and get them back on track and help them, get across the finish line with buying a house. So I put together these, podcasts and, do a fair amount of storytelling, but I do this with hopefully the expectation that it's going to help you to avoid some of these same missteps that other people have made. And so hopefully you get some value out of the podcast. Hey, do me a favor. If you enjoy this podcast and you get value out of it, would you be so kind as to share this podcast with friends and family who could benefit from it? And then also, if you're listening on iTunes or via iTunes, do me a favor and give us a 5-star review and maybe share some kind words. That helps us to get in front of more people as well too, and then it helps that audience to grow, and hopefully we have a bigger impact on people that are out there. So hey, for episode 100, what are we going to talk about? What's special about episode number 100? I decided I wanted to talk about budgeting. Okay, right? Nobody wants to talk about budgeting, right? Like, that's not fun. That's not interesting. That's definitely not cool, but it's necessary, okay? If you're getting ready to purchase a house, you really need to look at a budget, okay? Now, I can tell you, I get a lot of clients that have no idea, what budgeting is, or, they just don't have a budget, period. And, it's clients from all walks of life where they just don't really pay attention to their money. So, I have some folks that think, hey, gosh, we can afford a monthly payment of up to, let's just say $2,000 a month, when in all honesty, they have no experience of making a housing-related payment at $2,000 a month. So they haven't done a budget. They haven't really figured out where their money's going, what they spend money on. They haven't really drilled deeper into kind of the household expenses that you would have as part of owning a house that maybe you don't have right now as part of either renting a house or as part of, living with a family member, right? Because there are things that oftentimes clients don't take into account when they buy a house. Things like utilities, right? Electricity, water, cable, sewer, you name it, insurance, all kinds of little things that, people don't think about as part of owning a house that are things that you would have to contend with that would be a regular reoccurring expense that you have, right? Whether it's property taxes, homeowners insurance, it's gas, it's electricity, it's water and sewer, it's, if you will, cable, trash removal, those kinds of things that oftentimes people don't think about that are in addition to making your mortgage payment, right? Because in many cases, your mortgage payment is going to, of course, cover the principal and interest portion of your payment. And for a lot of folks, it's also going to cover, if you will, your taxes and your homeowner's insurance. But, there's other expenses to owning the house that you need to give some consideration to as well. And you have to look at all of that as a component of your overall budget, right? Because in addition to owning your house and those expenses that come with owning a house, you may have a car payment. You may have a student loan payment. You may have a credit card payment. You may have other payments that you have to make on a reoccurring basis that you need to take into account. And so you need to take everything into account and be able to figure out that if you can truly sustain a mortgage payment at a certain level. Now, let me stop you real quick, okay? Because oftentimes, the bank can approve you for more than what you reasonably can afford to spend, okay? Now, that almost sounds somewhat like irresponsible on the bank's part. But what happens in today's world when it comes to qualifying for a mortgage, most loans go through an automated scorecard to obtain an approval, okay? Oftentimes, those automated scorecards will approve a loan for a level of debt that is much higher than what a client may be comfortable in paying on a per month basis, okay? Because keep in mind that, those scorecards don't take into account account, your electric bill. They don't take into account your gas bill. They don't take into account your car insurance. They don't take into account, let's say, your private school tuition. There's a lot of things that are not factored into that scorecard when it issues your approval. So those are all things that you need to take a look at. So if you're somebody who's not used to doing a budget, you really shouldn't be buying a house without having a budget, because how would you know whether or not you could sustain owning that property if you don't have a budget, or if you don't know what you really can afford to spend on a reoccurring basis, okay? Because unlike rent, and I can't really say that. This is not really a true statement, because with rent, if you don't pay your rent, sooner or later, your landlord's going to kick you out of the house, right? That's true with the mortgage too, okay? If you don't make your mortgage payment, they're going to kick you out of the house as well. It's just a different process of getting removed from the house. But, what I was going to say is, your mortgage payment, the bank's going to expect that payment every month, okay? And traditionally, for substantially almost every mortgage that's written in the U.S., your mortgage payment is due on the first of the month, and you generally have through the 15th to make that payment before it becomes late. But it's due the first of every month, and the bank expects that money the first of every month, okay? So you have to be able to sustain owning that house and make that payment month after month after month until that loan is paid off. Well, if you figure the typical client ends up taking a 30-year mortgage, you're going to be making that payment for a long period of time. So you have to make sure that the budget of what you spend on a per month basis is something that's sustainable, and that it's something that you can afford to pay, even if you had a decrease in income, or even if you had some kind of negative impact to your overall financial circumstances. You want to make sure that you have the ability to sustain owning this house, and that you truly are not buying a house that's going to put you, let's say, paycheck to paycheck, okay? Because just because the bank says you can afford something doesn't necessarily mean that that is in your best interest, or that it's something that you truly can sustain for an extended length of time, or you can make that payment on a recurring basis. So you have to take some ownership in this process of owning a home. You have to be able to make sure that you actually can afford to repay this debt on a per month basis. And you want to make sure, because when you're buying a house, right, like this is the roof over your head, the last thing you want to do is put yourself or your family at risk of losing that roof over their head because you bit off more than what you could chew, or because you were hoping that some way, somehow, money was magically going to, fall from the heavens to you so that you could, continue to make your mortgage payment. So, I really can't encourage you enough to really sit down and have a budget and have a plan, so that when you do go through and you do buy a house, you can actually sustain owning this house for, forever, right? Until it's paid off, that you can be successful at home ownership. Because if you try to buy a house and have no budget, you are certainly going to give yourself increased odds of failure. And, why have unnecessary financial stress or pressure when it all could have been avoided had you taken a little bit of time to truly understand what you could afford, what your budget looked like, and what was sustainable for you. Hey, my name is Dan Morales. I go by Dan the Mortgage Man. You can find me online at danmorales.com. That's DANMORALEZ.com. My phone number is 616-931-4629. My NMLS number is 709729. And, of course, North Point Bank is an equal housing lender.